As you know, we have been loading up the truck here on gold in the last week, especially last week when we had the price action come all the way back down towards the 1820s, 1830s, 1840s to build out multiple positions. Gold has had a slingshot move higher. This time last week, gold broke down on non-farm payroll to $1,810 per ounce. Right now, gold is trading at $1,880 per ounce, over a 700-point move in just 1 week. There are multiple reasons for this that we talked you through. All you need to do is go back to last week's report. We were banging the drum with you. Gold is on a massive fire sale. The bigger the sell-off, the bigger the rally. We've absolutely seen that take place over the last week. Alongside that, you've got oil prices, which have just broken out 200 points since yesterday. We've in fact taken the opportunity to get into positions here at the $83 per barrel zone. We've got oil right now breaking back above $86 per barrel. But I'm seeing a lot of traders out there that are looking at opportunities to try and fill the gap here with respect to gold that was created at the beginning of the week with the geopolitical tension and risk that is currently accelerating in the Middle East. Now listen, if you have experience in the markets and you've traded gold and oil before during Middle East conflicts here, you should know it is a very bad idea to be selling gold and oil into the weekend here. Just have a look at what happened at the start of this week. Oil prices gapped up 500 points on the open. Gold prices, they gapped up over 200 points. Gold is now getting very close to $1,900 per ounce. There'll be many traders that will be forced to close out sell short positions into the weekend because of the unknown risk that could be created with the current situation in the Middle East here. If you have traded Middle East tensions before, which of course we have, you will know that typically gold and oil will benefit off the back of this. You will get a lot of traders just from a pure risk management point of view needing to close out sell shorts on gold and oil into the weekend here, and you could certainly see more traders look to try and get exposure on gold and oil before the close on Friday. So we're not even back at $1,900 per ounce yet. We're trading back around the 1880s, but I would not be surprised at all to see gold trading back towards 1900 as we go into next week here. So be very careful if you're shorting gold and oil right now. If history is anything to go by as we go into the weekend here, very likely you could start to see a price action to the upside as the geopolitical conflict does accelerate. It is not deaccelerating at the moment. Turn on any major news feed or news channel. If anything, things are starting to accelerate as we go into this weekend, and you have to know how the metals, how commodities, how they respond to these sort of events. They go up, right? They go up. And we've seen a fantastic opportunity over the last week to build out multiple positions, and even gifted now with crude oil over the course of this week with a retest back down towards the recent swing lows from high to low, broke down 1,400 points. You know that previously we were selling short, we banked the sell short, and now we've flipped and going net long here on oil. So we started to build into multiple positions here on oil on the recent sell-off over the last 24 hours. Those trades are now moving up nicely. We were buying in around $83 per barrel. You've got oil right now, it's trading back above $86 a barrel. As you know, we've built into multiple positions on gold. To give you actually the exact figure, we have 14 trades right now on gold. We built into multiple positions last week on the sell-offs back down towards that 1820, 1830, 1840 zone. And I must say, thank you for all of those that have reached out just regarding your phenomenal results that you've achieved in the last week by following our reports, by keeping in touch with all of our videos. You have absolutely crushed it in the last week. Many of you making 5, 6, even 7-figure returns. It's been absolutely phenomenal. That's what we love to hear. Thank you very much indeed. Again, feel free put any comments just below this channel. That's been absolutely amazing to see all of that feedback, all of the comments. So many of you absolutely crushing it in this market, which is of course what we want for you. We have very uncertain times right now around the world, but if you're experienced in the market and you know the typical playbook here, you will know how commodities perform in these certain situations. So again, keep a very close eye on gold and oil as we go into the close tonight, as we go into the weekend. And then of course, look out for potential gaps higher into the Sunday open across energies and also metals. The gap higher is not a guarantee. However, traders would be well advised to start closing out sell shorts into the weekend when there's so many unknowns with the current geopolitical risk. And again, This comes down to experience in the market, trading through these periods before, knowing how commodities tend to react, taking advantage of the massive sell-offs that we had last week on gold. Again, gold prices this time last week on non-farm payroll, they were at $1,810 per ounce. They've now slingshotted over 700 points. We're just starting to break above 1880 at the moment for gold. I would not be surprised to see 1900 tested in the coming days here. It may happen sooner than many think. And again, this comes down to utilizing data, statistics, market intelligence. Again, what I'm seeing right now from technical traders is they see there's a gap to fill at the moment on gold back down towards the 1835 zone. Go back to the gap that was created in March here on gold during the invasion of Russia into Ukraine. That gap on gold did not get filled for 6 months. That gap does not have to get filled at the moment on gold. So I'm seeing a lot of technical traders looking for that gap fill right now on gold. And again, technical analysis is not going to give you any sort of an edge. You want to be utilizing research here, data, statistics, market intelligence. Further align that with the real-time data-driven cycles. So essentially learning the daily, weekly, monthly, quarterly, real-time cycles for each commodity. Further align that with the capital flows in the market. Not only did we have the geopolitical conflict, which kicked off at the start of this week, we also had China back after their 1 week public holiday. What did we see? Huge acceleration to the upside at the start of the week with gold. Gold's up over 700 points now from low to high in just 1 week, and oil prices, they gapped up over 500 points. I still like oil at the current prices, but again, we're buying here back down towards the 83 US dollar per barrel zone for WTI crude oil. Then further align that with the intermarket correlations, the ratios in the market, and of course the narratives, the geopolitics, which are very important right now, the fundamentals, the macros, understanding and learning the key areas of liquidity that are targeted so you can really get your sniper entries in correctly, and then know, of course, when to bank that windfall amount of profit as well. And then finally, understand and learn how the hedge funds, the money managers, the banks, institutions, how they're all positioned in the market in real time. This is going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.